There is an ugly tax giveaway trying to sneak through the Florida legislature under the guise of helping rural communities. We're going to tell you more about this snake oil in our next daily update from the Florida legislature's 2025 legislative session. Hello, and welcome to Seeking Rents, the podcast. I'm your host, Jason Garcia. I am the publisher of Seeking Rents, a newsletter in Florida about state politics, but with a particular emphasis on the ways that big businesses and other special interests influence public policy in this state. This is going to be an update from day 28 of the Florida legislature's 60-day legislative session. And I think I'm going to spend most of today's show focusing on one bill in particular, Senate Bill 1322, which has the incredibly sexy title of Tax Credits for Investment in Rural Communities. This is a bill that absolutely sailed through the Senate's Commerce and Tourism Committee yesterday on a unanimous 9-0 bipartisan vote. Nobody had any questions. Nobody said a word in debate. Everybody just looked at this thing and said, "Oh, this is good for rural communities. Let's go." Stamp of approval. The sponsor or the legislator presenting it yesterday even called it a quote unquote sibling to the Rural Renaissance Package, which is this big package of changes for rural communities that the Senate president, a guy by the name of Ben Albritton, is pushing this year. Albritton, a Republican from Wauchula, comes from a farming family and represents a really rural area of the state. So he's made helping rural communities with, like, access to healthcare options, to education options, to technology. He's made that like a central focus of his presidency. And so clearly Senate Bill 1322 is kind of trying to wrap itself in that mantle. The thing about this legislation is that it is snake oil. This is a bill that comes from a company called Advantage Capital Partners. And Advantage Capital Partners is a company that has spent quite literally more than 2 decades now lobbying state legislatures around the country to pass these incredibly complex and opaque tax incentive programs that tend to do very poorly for taxpayers, but quite well for Advantage Capital and the small handful of other firms that end up managing the programs essentially. We know this, by the way, A, because I've got records that show that Advantage Capital sort of gave this bill to legislators and is pushing it with them, but also because I wrote about this about 5 years ago, back when I was with the Orlando Sentinel, when essentially this exact same bill was in Tallahassee, but with just a slightly different gimmick. Back then, it was rural. It was a rural tax incentive, but also being pitched as a way to help communities recover from hurricanes. And and that's the thing. Well, so Advantage is pitching, and its supporters are pitching this as like a new program to help rural communities right now. What this really is just a rehashed version of the same sort of junk these companies have been peddling now for years. So listeners or viewers of a certain age might remember CAPCOs. I believe that stands for Certified Capital Company Programs, that were around in like the late 90s and aughts, sort of thereabout, and then eventually fell by the wayside because people realized they were not working at all. Those then became the New Markets Development Program, which, if memory serves, were a tax incentive program that was supposed to be focused on like poorer communities. Florida at one point had an enormous New Markets Development Program, in large part because of lobbying by Advantage, before finally the Florida legislature stopped funding the program and let it die because they realized they were getting such a terrible return on investment through it. And now we're seeing this pitched as a tax incentive program for rural communities. But as I said, we've seen it before pitched for like hurricane recovery. I know it's surfaced in the past also as like aimed at helping manufacturing companies, the manufacturing industry. Essentially, whatever is kind of the sexy economic topic du jour, whatever might sell that particular session in a state legislature, that's what these programs get pitched as. And the thing about them is they all followed the same basic structure. And like I said, this is very complicated, and this is why these things tend to sort of sneak through committees without any sort of scrutiny whatsoever. But basically, the general way these programs work is they make the state give a bunch of tax breaks or tax credits to insurance companies if the insurance companies make investments in investment funds that then turn around and invest in whatever the target of the moment is. So in this case, it would give tax credits to insurance companies that put money into investment funds that then turn around and invest in businesses who are operating in rural parts of the state. And just sort of saying that, you can probably glean like What a terribly overly complicated way to do this. I mean, if you want to help rural businesses, help them directly. Why on earth would the approach to helping a rural business be give a bunch of tax breaks to insurance companies so they can give a bunch of money to investment funds that those investment funds can go then help rural communities? It's just like it's utterly illogical. It's like asking Rube Goldberg to design an investment program. And so these are really inefficient ways to spend money, but they become very lucrative for the companies that manage these investment funds, and that's part of what Advantage does. So these companies can make money off of transaction fees and other fees for managing it. They also end up becoming co-investors alongside the sort of state subsidized investments. So they make money in a variety of ways. But in addition to just making a lot of money for the companies that are writing these laws, they also they become a terrible money loser for taxpayers. So in fact, I'm going to make sure I get these numbers right. So I'm looking at my computer screen here, but the last time state economists, so the state has the legislature has an Office of Economic and Demographic Research. The last time they studied the New Markets program before it sort of finally mercifully died, and this was in February 2023, they found that Florida taxpayers were losing 98 cents of every $1 they put into the program. Again, losing money. We're not talking about just not getting the money back you invested, but it's actually like leading to additional costs that taxpayers are having to cover. This is a quote from that last study. Quote, the program does not recover any portion of the state's investment, and state revenues are less than they would have been in the absence of the program. Why on earth would we do this? And by the way, supporters will say this is different than the New Markets program. These are like cosmetic differences. The legislator's own staff has pointed out that this is essentially the similar program as New Markets. And if that's not enough, I'll just give you one other example. The state of Georgia a few years ago passed basically this same bill. They called it the Georgia Agribusiness and Rural Jobs Act, and the state of Georgia put up, I believe they put $60 million into that program. This bill, by the way, in Florida wants $100 million. So auditors in Georgia actually just not too long ago evaluated the program, and they found that it would take at least 72 years for taxpayers to see a positive payback on the $60 million they're investing in that program. 72 years. These are just wildly poor programs. There's also, and I'll include in the show notes a bunch of stories about this. There's like horror stories all over the country. Maine has horror stories. State Line a few years ago wrote a really interesting series about these Rural Jobs Acts specifically and sort of the history behind them and the New Markets program and the CAPCO programs. I'll post those in the story I wrote in the show notes so you can get a sense of, you know, why I'm so exercised at this seemingly benign, non-controversial bill that is really just, in my mind, a twisted attempt to try and like glom onto the interest, the bona fide, genuine interest that I think a lot of senators have in helping rural communities. You want to help rural communities? That's great. This is not the way to do it. So we'll see where the bill goes there. We'll obviously talk more about it if it keeps moving. I'm kind of hoping maybe this was just a one-time hearing where you hold a hearing and let the lobbyists go back to the client and say, look, like we're making progress, and just sort of let them show some tangible results. Is not the sort of lawmaking that I would sort of endorse myself, but hoping at this point that's all we're seeing. But if the bill keeps moving, we'll obviously tell you more about it. The only other two bills I think I would flag from Monday, there's a lot going on, but just to try and keep this brief, both the House and the Senate have continued to move bills we've talked about that essentially invent more reasons for businesses and state officials to deny unemployment insurance to laid off workers. The Senate is advancing Senate Bill 1238, and the House is advancing House Bill 1157. Both of these come from a billionaire-backed think tank called the Foundation for Government Accountability, which has been claiming in states around the country without any real evidence that employees are quote unquote or workers are quote unquote ghosting potential employers and not showing up for job interviews so they can continue collecting unemployment benefits, as if people are avoiding work for Florida's maximum payments of like 290 some odd dollars a week. And that's the maximum, by the way. Most people don't get it. They're also being supported by big business lobbying groups like the Florida Chamber of Commerce, which is a front for, Disney and Publix and all those guys. So, shout out to the big business lobby for finding a way to further screw over workers you've already laid off. Like, way to go, guys. So these bills have now moved quite a bit. So I suspect we're looking at a potentially dicey end. These bills could be headed towards passage. So we'll keep you posted. We'll probably write some more about those on the newsletter as well, too. So, okay, we're going to leave it there for today's show. However you're watching or listening to this, just make sure to, if you don't mind, click like and subscribe. Helps us spread the content far and wide. If you got any comments, reach out anytime. Feel free to leave a review. Those are always really helpful too. And then if you haven't already, please think about signing up for the newsletter. Easiest place to find us is at seekingrentsfl.com. Subscriptions are free, but there is an option to voluntarily pay for a subscription if you can afford it.